I got a tip from friends because I think working as a corporate finance in investment banking, you always have fundamental analysis and all this to make your investment successful. Sometimes you always need a tips from a friend, which I got. There was an investment into the stock called Tonghua, I think it's still trading today. It's called TH. My friends had always all these stories, they have all this plan, etc. This is like a punch kun pan. It's this like punching stock, right?
Punching stock.
So you should you could go in and out quickly. Right? All these stories, I did some source checking. Finally, I asked my dad for some money. Okay, my friend specifically told me that if it goes above 3 baht, I should sell. The stock is not that liquid when we enter into it, so it takes like a day or two. So we enter into about 2.5 baht at the time, and then a week later, etc. I found out the stocks went up to 3 each, right? But the volume was so liquid. So I decided to go against my advice because of greed.
Hello, fellow risk takers, and welcome to my worst investment ever. Stories of loss to keep you winning. In our community, we know that to win in investing, you must take risks, but to win big, you've got to reduce it. My name is Andrew Stotts from A Stotts Investment Research, and I'm here with featured guest Olan Suthivej. Olan, are you ready to rock?
We're good.
All right. So let me tell the audience a little bit about you. You're currently the VP of Thailand Investment Banking and Capital Markets at Credit Suisse based in Bangkok. Olan joined Credit Suisse in 2014 and has over 12 years of extensive investment banking experience in equity-linked, debt financing, and M&A advisory transactions. Prior to joining Credit Suisse, Olan was an associate director in the investment banking department at UBS Securities Thailand and was responsible for client coverage and origination. Before relocating back to Bangkok, he worked in the fixed income currencies and commodities at UBS Hong Kong and was responsible for sales and distribution of financial products like bonds, derivatives, and commodities to Thai clients. Olan started his career in investment banking as an analyst at Phatra Securities based in Bangkok, and he graduated from the University of California, Santa Barbara with a Bachelor's of Arts degree in business economics with an emphasis in accounting, and holds an MBA from Sassoon Graduate Institute of Business Administration. Olan, take a minute, fill in any further tidbits of your life.
Well, I currently married with 2 wonderful children, very happy. So I think that's another thing that I want to add. I'm very happy.
That's the key to life. So many people are searching for happiness. Fantastic. Well, now it's time to share your worst investment ever. And since no one goes into their worst investment, it will be. Tell us a bit about the circumstances leading up to it, and then tell us your story.
My worst investment actually happened over a decade ago. It was when I was at Sassoon, still, trying to complete my MBA. I got the tips from friends, right? Because I think working as a corporate finance in investment banking, you always have fundamental analysis and all this to make your investment successful. Sometimes you always need a tips from a friend, which I got. There was an investment into the stock called Tonghua, I think it's still trading today. It's called TH. My friends had always all these stories. They have all this plan, etc. This is like a punch kun pan. It's this like punching stock, right?
Punching stock.
So you should you could go in and out quickly. Right? All these stories, I did some source checking. Finally, I asked my dad for some money, about 300,000 Thai baht, right? So at the time, it was still quite a lot. It was still a lot today. You should sell. Okay, my friend specifically told me that if it goes above 3 baht, I should sell, right? Of course, when we were at school, I don't trade stocks every day. The stock is not that liquid when we enter into it, so it takes like a day or two. So we enter into about 2.5 baht at the time, and then a week later, etc. I found out the stocks went up to 3 each, right? But the volume was so liquid, so I decided to go against my advice because of greed, and I let it run for me a day or two. And what happened is that the stocks crashed. It went floors for a couple of days.
and the floor in Thailand, for our global audience, means down 30% in a day?
Correct. there's a ceiling and floor on any given trading day. So it's unlike in the States where there's no limit to the trading price, right? It floors on 30% of the first day, and then the next day, it just open up at the floors again, right? I decided to exit at below 2 baht, right? So I end up losing 20%-ish. So I think that is pretty much the story, right? I think embarrassment, but it actually taught me a lot, right?
So let's review what
sure.
did you learn from this story.
First, don't let greed overcome your judgment, right? In all investment, you should have a clear path, target price that you should exit. Doesn't matter what if it reached. I think you should take unless you have a new information that lead to why you should continue to hold or not to sell, right? You should follow your initial target. I think it takes discipline to master your emotion. I think it's like gambling as always. It's always if you win more, you always want to win a bit more, right? But again, I think the great trader that all I've read is they all follow their disciplines and make decisions. Because it's always win and lose. You always gonna win some, lose some. Yeah.
So let me summarize what I take away from your story and let me know if I missed anything. Now, after doing many interviews with people, I've now classified the mistakes that people make into 6 major classifications. And the first one is fail to do their own research. And I think what's a very common mistake that people make, particularly in the beginning, when they're just starting investing, is that they invest upon a tip. And basically a friend, a broker, somebody calls them, and then they don't do their own research. And I think that's the first thing that I take away from this, is that for the audience, it's important. Now, the question that you have to deal with is like, were you really prepared to do research anyways then? What did you know about research at the time? So even the idea of doing research, you have to step back even further and say, should I really be buying individual stocks? And so there's some of those things that made me think about. The other thing is that the second major area that people make a mistake is what I call fail to properly assess risk. And I think that one of the risks that you mentioned is a very common risk, which is illiquidity in an investment. And sometimes an illiquid investment can have very erratic price movements. And so what you've described is something that what we call gapping down. So even if you had put in a stop loss or something like that, sometimes in a gap down situation, it could go down by 30%. Your stop loss was at 10%, but it opened at the floor. And so unless, if it's a large company with a lot of liquidity, things are going to go terrible to be able to have that happen. But with a small one, a gap down is a very common thing. So those are some of the things I take away from it. Is there anything I missed?
No, I think one interesting is that it's about the first one that I think it's about the research, right? Obviously, this company is very small. It's doing some sort of printing. I didn't do much intel or research into the company itself, but I did do research about my source, whether, so I was confident that those tip was real, and it was. It wasn't my friend's mistake, he was just trying to help, sharing the wealth, right? But I think the mistake happened because of my own greed, right? I think I wasn't disciplined enough. I didn't take profit when I was supposed to, right? And there was a window, right? I mean, if you remember, there was a window when the stock rally. There's a lot of liquidity, right? And I should have taken that profit, right? If I took the profit, I would never have make a loss. Right? I think that's another point that I think I would like to share with friends, right? If you make profit, you will never make a loss. No matter how big or small it was, it's still a profit. At least you're not losing any money. So that's one thing that I learned that I took away from that exercise.
And the other thing that I would mention is about this concept of tip. Basically, in the stock market, everybody's trying to say, I got a tip from a friend. This guy gave me a tip. I've got it. And in some cases, what they'll say is, I got an insider tip. Now, I think it's important to distinguish here, because if somebody is an actual insider to a company, and they breach their obligation to the company by revealing an inside information to somebody outside, that person has done a violation, and the person who is trading on it has also violated the insider trading rules and laws. But what my experience is after many years in the market is that 99.9999% of the time that people say, I've got a tip, it's simply because they have been doing research on the company. They're getting public information, and they're packaging it to people as, hey, I got the inside scoop. But what I found is that almost always, because it would be very rare that somebody would get that information and then spread it around like that. So that's another very important thing that we want to make sure when we're trading on public information.
Correct.
Now, also, one thing about this interesting for the listeners that I would say is that what we call insider trading is non-public or material non-public information. And it has to be material. If it's non-public information, such as I found out that a company the head of sales has just resigned. Well, is it material? It's probably not going to move the stock price. Is it a significant piece of information? Yes. Is it private? It hasn't been disclosed. Yes. Can I trade on that? According to CFA guidelines, you can trade on that because it's not material, even though it's non-public. So I think these are important things that we learn when we're in the markets, and we always want to make sure that everybody's thinking about these things rather than taking the risk, because you don't ever want to do insider trading, because then you're going to get in trouble.
Specifically, working in a global bank now, the compliance is very strict. So every time I want to trade, I need to get my seniors approvals and also compliance department approval. Given it's so troublesome, so since I joined UBS in 2010, I haven't really actively traded individual stocks now. So what I do is that I just buy into mutual funds, etc. Because then it's much easier. You let the professional manage for you, and then it's in a way you don't have to overcome your hard decision. Oh, whether I want to take profit now. So that's another easy way out if you don't have time, right? Which in my line of work, I deal with sensitive information, and a lot of times I'm in meetings. I can't trade, instantaneously because I need to get approvals. So how I deal with this situation is that I simply just, put my money into a mutual fund or buy a real estate per se.
And I did the same thing, particularly as I went to Citibank. When I started working there, because I was also covering small cap companies, and then you run into a lot of potential conflicts. Like, should I cover this company? Would I buy it? So I just did the exact same thing. And I think a lot of financial professionals do the same. Well, that's great. All right. Well, listeners, that is another story of loss to keep you winning. To find more stories like this, previous episodes, and resources to help you reduce your risk, visit myworstinvestmentever.com. As we wrap up, Olan, thank you again for coming on the show. I know it's painful talking about our losers, but our listeners are learning to win as a result. Do you have any parting words for the audience?
Stay focused and be disciplined. Thank you.
Right on. Well, that's a wrap on another great story to help us create, grow, and most importantly, protect our wealth. Fellow risk takers, I'll see you on the upside.